Hi, Assalamualaikum. So today our group will present about RHB Bank. So executive summary. What is RHB Bank? RHB Bank is formed in 1997 through the merger of Bank DCB Bank, Kuong Yi Bank and Sime Bank. It's a leading Malaysian financial institution offering personal, Islamic, corporate and investment banking and wealth management services. With a strong regional presence in Southeast Asia, RHB focus on innovation and digital solution to enhance operation and customer satisfaction, including mobile banking, financial software robots. The bank prioritize sustainability through ESG and corporate sustainability management, strong capital adequacy ratio and a robust balance sheet underscore its financial health. Future plan including enhancing digital services, expanding customer-centric product, and leveraging its vast branch and electronic network to deliver stakeholder value and drive growth. So, introduction. So, here are some of history background of RHB Bank. RHB Bank Berhad founded as Kuong Yi Bank Berhad in 1913 and rebranded in 1997 following the merger with DCB Bank and Sime Bank. It's one of Malaysia's oldest banking institution, renamed to RHB Banking Group in 2016. It streamlined its processes for better market positioning. The bank structure includes key segments like corporate and investment banking, retail banking, business banking, treasury and global markets, and international business along with subsidiaries in Islamic bank, investment banking, insurance and asset management. From 2011 to 2015, RHB saw its asset rise to RM181 billion through return on asset and return on equity decline. Operating in 9 Southeast Asian countries, RHB aims to be a major regional player by expanding its diverse service offering and strengthening its competitive position and asset base.
Next, overview of bank's product and services. RHB Bank offers various products and services for individuals, businesses, and large corporations. Personal banking services include savings and current accounts, fixed deposits, and investment products like unit trusts and bonds. Savings accounts are convenient for everyday use, often featuring online banking and debit cards, while fixed deposits provide higher interest rate for money locked in over a certain period, offering a safe way to earn returns. For businesses, RHB Bank provide business accounts, trade finance, cash management services, and business loans. Business accounts help manage daily transactions and come with features such as payroll service and online banking. Trade finance supports international trade through services like letters of credit and export financing, while business loans, including term loans and working capital loans, aid in business growth and operations. RHB Bank also serves larger corporations with services like syndicate loans, treasury and cash management, and capital market solutions. Syndicate loans facilitate large-scale financing by involving multiple lenders, and treasury services help manage liquidity and financial risk through foreign exchange and derivatives. Capital market services assist in raising funds through equity or debt. However, managing multiple products and associated fees can be potential drawbacks. Impact of digital technologies. The digitization of RHB Bank's products and services has revolutionized customer interaction. With online and mobile banking platforms, customers can handle transactions, manage accounts, and apply for loans or credit cards from anywhere, eliminating the need to visit a branch. This convenience has boosted digital banking's popularity, increasing customer engagement and satisfaction as people now expect faster and more efficient services. For bank operations, digitization has streamlined processes, reduced costs, and increased accuracy. Automation of tasks such as transaction processing and customer service inquiries allows staff to focus on more critical tasks. Data analytics and artificial intelligence enable banks to understand customer needs better, offer personalized services, and conduct targeted marketing. Enhanced cybersecurity measures ensure the safety of customer data, maintaining trust in the bank's digital services. Overall, digitization has transformed the financial landscape, compelling banks to innovate and stay competitive. RHB Bank's digital transformation has strengthened its market position, meeting the demands of tech-savvy customers. This shift not only improves efficiency and customer satisfaction, but also promotes digital inclusion, making banking services more accessible to a broader audience.
Profitability refers to a measure of efficiency. It is the metric used to clarify the magnitude of a firm's profit with respect to the size of business, hence indicating whether it has any chance of succeeding or failing. Profitability would indicate to key stakeholders whether or not a company is able to sustain its position in the market due to having into growing. It is the degree to which a firm generates profit. A firm's profitability comprises two parts, which is revenue and expenses. A business will thus be considered profitable if its revenue higher than its expenses. We dive into RHB Bank's financial performance for the year 2023, focusing on key metrics that shed light on its operational efficiency and profitability. Let's begin with return on assets. In 2023, RHB Bank saw its net profit rise to 2.8 billion ringgit alongside a 5.7% increase in total asset to 3 to 8.7 billion ringgit. Despite this growth, the return on asset slipped slightly from 0.87% to 0.85%. This indicates a need for RHB Bank to enhance the efficiency of its asset utilization to sustain higher returns moving forward. Return on equity. Although net profit increased and total equity expanded to 30.9 billion ringgit, the return on equity or ROE declined from 9.41% to 9.06%. This suggests that while RHB Bank generate more profit, its ability to deliver returns on shareholder equity has weakened, emphasizing the importance of improving efficiency in leveraging equity for profitability. Moving on to spread. RHB Bank's net interest income decreased to 6.0 billion ringgit in 2023, while total asset grew. Consequently, the net interest spread declined from 2.12% to 1.83%, reflecting reduced efficiency in generating interest income from asset. This poses a challenge for the bank in maintaining profitability through core lending activities amidst changing interest margin. Finally, net interest margin. Despite an increase in interest income to 11.9 million ringgit, higher interest expenses led to a decrease in net interest margin from 6.6 billion ringgit to 6.0 billion ringgit. This decline underscores the impact of rising funding costs on profitability, highlighting the bank's needs to navigate a challenging interest rate environment. In conclusion, while RHB Bank demonstrates overall financial health with increased profits and asset base, the decline in ROA, ROE, spread, and interest margin indicates areas where the bank must focus on enhancing operational efficiencies to sustain and improve profitability in the future.
Assalamu alaikum, my name is Adam Khan and I'm going to be talking about the liquidity ratio for the company RHB Bank. First and foremost, what is liquidity ratio? Liquidity ratios are financial measurements that are used to measure a company's ability to cover its short-term obligations with its most liquid asset. Key liquidity ratios that we are going to look over today are loans to total asset ratio and liquid assets to total assets ratio. So firstly, let's take a look at the loans to total asset ratio. As we can see, the ratio went from 68.3% at the year 2022 and decreased to 67.7% at the year 2023. The decrease in ratio indicates that there are reduced reliance on debt financing, which can lead to lower risk and improved financial stability. Next, we are going to look over at liquid asset to total assets ratio. As shown in the data, the ratio went from 6.2% at the year 2022 to 4.3% at the year 2023. The decrease in the ratio is not ideal as it indicates that RHB banks have a smaller proportion of assets that are in liquid form.
Today I want to talk about the asset quality. Asset quality is measure of institution financial health and stability in banking and financial institution. The term simply put the quality of the bank or financial institution asset, usually loans and investment. High quality asset pose a low risk of default and high returns. Contrast with these poor quality asset are those with high risk and hence potential losses. Asset quality is the information required by investors, regulators, and financial managers that speak about its influence upon an institution profitability, stability, and general risk profile. According to the calculation, the loan to deposit ratio LDR are decreasing from the year 2022, 93% to 2023, 90%. On the other hand, the gross loan to deposit ratio of RHB Bank would be 2020 to 2023, reflecting its strategic decision towards the balance between liquidity and profitability. A low ratio typically indicates high liquidity and at the same time a rather conservative lending policy. However, this would also imply missing out of the maximization of deposit to generate income, which would have an impact on profitability and growth in the long term. These dynamics are important to understand for an overview of the financial health of bank and its strategic positioning. The gross impaired ratio of RHB Bank was upward trend from 2022 to 2023. It was 1.55% as December 2022. By March 2023, this has risen slightly to 1.5%. And by December 2023, it hit 1.7%. It signifies a rising trend of impairment in loan. The bank's total loan book over time. The gross impaired loan ratio has become a key metric of checking the overall asset quality and financial health of the bank. This ratio of RHB Bank has slightly increased from 2022 to 2023, but remain a permissible value that show a rather stable credit risk profile for the bank. High gross impaired loan ratio have appreciable adverse effect which manifests in the form of enhanced provisioning, reduced profitability, and increased security from regulators.
Capital adequacy. Capital adequacy refers to the minimum capital level a bank or financial institution must uphold to withstand losses and remain operational during financial turmoil. This concept is crucial in the banking and financial sector, ensuring the stability and solvency of financial institutions, mitigating the risk of bank failures and promoting broader economic stability. The evolution of capital adequacy ratios for this ending 31 December 2023 and 2022 reveals a decline in both the risk-weighted capital ratio and the core capital ratio over this period. In 2023, the risk-weighted capital ratio was 18.88%, down from 20.83% in 2022, while the core capital ratio decreased from 17.83% in 2022 to 16.13% in 2023. This reduction indicates that while the bank or financial institution has maintained a solid capital base, the growth in risk-weighted asset has outpaced the increase in capital. As a result, although the institution remains well capitalized, its capital buffer relative to its risk exposure have diminished, potentially affecting its capacity to absorb losses during financial distress. Overall, the RHB Bank continues to exhibit strong capital adequacy, but the downward trend in this ratio suggests the need for careful monitoring to ensure ongoing financial stability and adherence to regulatory capital requirements. Management soundness. Management soundness refers to the effectiveness, competence, and prudence of a financial institution's management team in governing and operating the organization. It includes the capacity to set and attain strategic goals, manage risks, ensure regulatory compliance, maintain financial stability, and foster sustainable growth. Effective management practices are crucial for the institution's success as they significantly impact its operational efficiency, profitability, and overall resilience against economic challenges. The analysis of administrative expense to total expenditures for RHB Bank in 2023 and 2022 shows a slight improvement in efficiency. In 2023, the ratio of administrative expenses to total expenditures was 83.36%, down from 85.99% in 2022. This decrease indicates that administrative expense constitute a smaller proportion of total expenditure in 2023 compared to the previous year, suggesting that RHB Bank has made strides in managing its administrative costs more effectively. This improvement in cost management could positively impact the bank's overall financial performance and operational efficiency.